Hi, welcome back to the channel. In today's episode, I want to talk to you about something that on the surface looks like really good news for Russia, but when you dig down into the detail, it actually raises some very serious questions. Because right now, the Russian ruble is trading at its strongest level against the Chinese yuan since the start of 2023, that's more than 3 years ago. And against the US dollar, the ruble has also staged a remarkable recovery compared to where it was trading at various points over the last few years. And that sounds impressive. Strong currency, strong country, strong economy. That's the traditional economic logic. But there's just one problem. Russia's economy isn't booming. In fact, the Russian economy is increasingly looking like a wartime economy under pressure. Growth has slowed sharply in early 2026. Inflation remains elevated, interest rates are painfully high, consumer spending is weakening, industrial production is being distorted by military demand, and many sectors of the civilian economy are struggling badly. So the big question is this: why on earth is the ruble so strong? Because if you actually step back and think about it logically, this doesn't make any sense. Russia is heavily sanctioned. Large parts of the world no longer trade with Russia, foreign investment has collapsed, Western companies have left, and perhaps most importantly of all, a huge amount of Russia's international trade is no longer even being conducted in rubles. A lot of Russia's exports are now being sold to China and other countries using Chinese yuan and other currencies instead. So under normal economic circumstances, you would expect the ruble to be very weak, but instead it's strengthening. And the really interesting part of this story is that this strength is actually creating major problems for Russia itself. So in today's video, I want to explain what's happening with the ruble, why this strength may actually be bad news for the Russian economy, and why it's causing problems for Russian businesses and tax revenues, and why many people now believe that the exchange rate is being actively managed behind the scenes, because somebody somewhere appears to have decided that Russia needs a strong ruble. And the question is, why? But before we get into the details on any of that, could I ask anyone that hasn't subscribed yet to please hit that red subscriber button? It really does help me with the algorithm and also puts a smile on my face. Now let's start off by looking at the charts, because I think the charts tell a really important story, and I know everybody loves a graph. So if we have a look at the US dollar versus the Russian ruble exchange rate over the past 10 years, what you'll notice is that for long periods the ruble traded relatively steadily around about 60 to 70 rubles to $1 US. Then in 2020, during COVID, we saw a significant weakening in the Russian currency as oil prices collapsed and global markets went into turmoil. And you can clearly see that on the graph, because the exchange rate moved from around 62 rubles to the dollar before COVID to around 80 at the peak of the pandemic. Now, that was a major move at the time and reflected just how vulnerable the Russian economy is to shocks in global energy markets, particularly oil. But of course, the biggest move on the chart came in 2022, following the invasion of Ukraine. And if you look at that section of the graph, you can see just how dramatic the reaction was initially. The ruble weakened sharply as sanctions were imposed, foreign reserves were frozen, and there were genuine fears of a major financial crisis inside Russia. At one point, the ruble was trading at around 120 to the dollar, and there were serious concerns that the Russian banking system itself could become unstable. But then something very unusual happened. After that initial collapse in 2022, the ruble started recovering, and at one point it got to around 50 to $1 US, which was the strongest it had been for around 10 years. If we look at 2023 and into 2024, there were periods of volatility. But what's really striking is what happened at the end of 2024 and into 2025 and 2026. You can clearly see on the graph that the ruble has strengthened significantly over the past 15 months or so, to the point where it's now trading at levels we haven't seen since the start of 2023. And that's the really strange part of this story, because normally currencies strengthen because economies are booming, investment is flowing in, and global demand for that currency is increasing. But that's not really what's happening in Russia. Now, we switch over to the Chinese yuan versus the Russian ruble chart. What's interesting is the overall pattern here is very similar. Again, you can see relative stability before COVID, then a weakening during 2020 as global markets and energy prices came under pressure. And you can then see the huge volatility in 2022 following the invasion of Ukraine and the introduction of the sanctions. But just like the dollar chart, what's really noticeable is the strengthening trend that's taken place since the end of 2024 for the ruble. And that's important because it tells us this story simply isn't about movements in the US dollar. Sometimes currencies strengthen or weaken because the dollar itself is moving around. But when you see the ruble strengthening against both the dollar and the Chinese yuan at the same time, it tells you that it's specifically about the ruble itself becoming stronger. And that's what makes this so unusual, because China has effectively become Russia's economic lifeline. Trade between the two countries has surged since the start of the war in Ukraine. Energy exports have increasingly shifted towards China, and yuan transactions inside Russia have increased massively over the past few years. So under normal economic circumstances, you might actually expect the yuan to strengthen relative to the ruble because Russia has become increasingly dependent on China economically. But instead, we're seeing the opposite. The ruble is strengthening against the yuan. And that's why so many analysts are now starting to ask whether this exchange rate is genuinely market-driven or whether it's being actively managed behind the scenes in Russia. And the really important point here is that this strength actually creates major problems for Russia's exporters. Because although Russian companies may be selling oil, gas, metals, chemicals, fertilizers and other products internationally in yuan or other currencies, when they report their financial results domestically in Russia, everything has to be converted back into rubles. And that means the stronger the ruble becomes, the less revenue those companies report in local currency terms. So let me give you an example just to put that into perspective. Imagine a Russian oil company sells a shipment of crude oil to China for 1 billion yuan. If the exchange rate is weak, that billion yuan converts into a very large number of rubles. But if the ruble strengthens significantly, suddenly that same billion yuan converts into far less rubles. And that means lower reported revenue, lower profits, lower margins, and critically from the Kremlin's point of view, lower tax revenues. And this matters enormously because the Russian government is now heavily dependent on energy taxes and wartime spending. The state needs money. So having a super strong currency at the same time as your economy is under pressure actually becomes incredibly damaging. And it gets even more complicated than that because Russia has implemented various capital controls and foreign exchange regulations, which effectively force many exporters to convert portions of their foreign currency earnings back into rubles. So companies are not always free to simply hold yuan and dollars offshore indefinitely. In many cases, they have to bring that money back into the Russian financial system. And again, if the exchange rate is being held artificially strong, those companies are effectively losing out during the conversion process, which raises another massive question. Why would the Russian authorities want this? Because on the face of it, it looks economically irrational. A weaker ruble would actually help exporters, it would increase tax receipts, it would improve competitiveness, and historically countries under sanctions often benefit from having a cheaper currency because it cushions the economic blow. But Russia appears to be going in the opposite direction. Now, there are several possible explanations for this. The first is inflation. Russia has been battling very high inflation for a prolonged period, and one of the quickest ways to reduce imported inflation is to strengthen your currency. A stronger ruble makes imported goods cheaper, it reduces pressure on consumer prices, and it helps stabilise the domestic economy politically. And politically, that's important, because ordinary Russians notice inflation immediately in food, electronics, cars, medicine, consumer goods. If the ruble collapses, prices surge very quickly at home. So from a political perspective, maintaining the appearance of currency strength may be seen as extremely important. The second possibility is confidence. A strong currency creates a psychological effect. It allows headlines saying the ruble is the strongest currency, Russia is resilient, sanctions have failed. And that narrative has huge propaganda value both domestically and internationally because currencies are symbolic. People associate currency strength with national strength, even if the underlying economic reality tells a very different story. And that may ultimately be what this is all about: optics, image, national prestige. The third possibility is financial stability. The Russian banking system has been under enormous pressure since sanctions began. A weak ruble risks triggering capital flight, banking instability, and panic. So by keeping the exchange rate relatively strong and tightly managed, the authorities may believe they are maintaining confidence inside the financial system. But the downside of all of this is enormous, because the stronger the currency becomes, the harder life gets for exporters. And Russia's economy is still fundamentally an export-driven commodity economy. Oil, gas, metals, and raw materials. That's where the money comes from. And if those exporters start seeing revenues squeezed at the same time as costs continue rising due to inflation and wartime pressures, eventually profitability starts getting hit hard. And if profitability falls, tax revenues fall. And if tax revenues fall, at the same time military spending remains extremely high, then government finances come under increasing strain, which means this entire situation may actually be storing up bigger problems for the future. Because what we may be seeing here is not a genuinely strong currency supported by a strong economy, but a managed exchange rate being used as a political and financial tool. And those are two very different things. The reality is that in a free and fully open market, many analysts believe the ruble would likely be significantly weaker than where it's currently trading, because today's exchange rate isn't happening in a normal economic environment. This is an economy with sanctions, capital controls, restrictions on currency movement, heavy state intervention, and increasing dependence on China. So the exchange rate itself may no longer be acting as a true reflection of economic strength. And that's why this story matters, because on the surface, the headlines make it sound like Russia is outperforming everybody. But underneath the surface, the picture looks much more complicated and potentially much more dangerous. So I'll keep you posted on any further news and developments, but hopefully you found today's video useful, informative, and most importantly, thought-provoking. If you've liked what I've said, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Now, don't forget, my competition to win my property or a cash alternative prize is now coming to a conclusion. There's only a short amount of time left, so if you want to get involved and help fund the channel, then scan the QR code on the screen now if you're watching on a TV or your desktop, or maybe even on a tablet. Scan it with your phone as if you're going to take a picture. A little yellow line will come up. Press that, it will take you through to the website, or you can click the link in the description below. It will take you straight through there. Thank you so much if you do get involved in that. Thank you also to everyone that's supported me in other ways. If you've bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a member, thank you for that support. Really helps to keep me focused and motivated and making as many videos as possible. Just wanted to mention that anybody that's interested in this sort of content, the Russian content, but you don't like all of the other things that I'm posting, I've set up a new channel, Joe Blogs Russia, where it's going to be only Russian content, so that's probably the place for you to go to. There will also be exclusive content on that channel, exclusive additional Russian content, because I don't want to overload the main channel with too many Russian videos, but on Joe Blogs Russia, I can put as many as I like on there, so go over, have a look at that. There's also a membership scheme where you'll get early access to videos, and also some exclusive videos that are only available to members. Another way of supporting the channel, so if you want to go over and do that, then that would be great. Also wanted to mention that Joe and Naz is now live. We're bringing a bit of fun and light relief and entertainment to YouTube. This is a sort of antidote to all of these type of stories, which you may find a bit heavy. If you want something that will put a smile on your face, please check that out. We need your help. We're at an early stage, so please go over to the channel. There's a link at the end of today's video. Subscribe, watch some of the videos. That would be great, and I think you'll enjoy it. It will put a smile on your face, and here's something else that will also do that.